All right, good morning again. So, yesterday we ended with talking about what a 401k is. And today we're going to finish what the other plans are so that you know what they are. So, we did 401k yesterday. That's where you, as an employee, put in money and your employer potentially matches that money or gives a certain percentage, and your contributions are they lower your taxable income, so you don't have to pay taxes on that money, that part of your income, and you don't have to pay taxes on the 401k money until you take it out. So there are three other plans. One is that 403b, one's a traditional IRA, and one is a Roth IRA. Those are the last three. So let's go through what they are. So a 403b, this is something that I have. So the 401k, I do not have as a teacher. I'm not allowed to have that. This is for private businesses. The difference between a 401k and a 403b is 403bs are for people like me, teachers. They are just like 401ks in some ways. And they are for employees of nonprofits, religious groups, public schools, and governmental officials or agencies. So that's teachers. Teachers have 403bs if they want to use them. One good thing about them is that administrative costs are lower than a 401k. So a 401k does have fees that you have to pay, like a yearly, management fee and stuff like that. The 403b does not. But one of the huge differences that makes it worse, a 403b, is that the employer matching is not common, rarely occurs. So I personally put money every month into my 403b, but my employer, Lenape Regional High School District, does not add to that number at all. So that's only me putting money in. My employer doesn't add to it at all. So it's a huge difference between the 403b and the 401k. Think about the maximum contributions are the same, $19,000 a year, unless you're over 50, then you can put more in. But think about the difference where, like, in a 401k, let's say I put $10,000 a year and my employer also would put $10,000 a year in. Huge, 20,000 bucks. Here, if I put $10,000, it's just $10,000. There's no adding to that by my employer. The rest of it's really similar. It's tax deductible. The taxable income drops just like in the 401k. The withdrawal rules are the same. I only pay taxes when I take my money out. The early penalty rules are the same. I can't get that money until I'm 59 and a half. If I do take it out early, I get a penalty of 10%, and the contribution max is the same. So everything's the same other than the fees are less, but the employer doesn't put anything in, just me. Okay, so those are your two big ones, 401k, 403b. Those are the things that come out of your paycheck automatically that you sign up for. The other ones are called IRAs and Roth IRAs. They're really, really, really similar. So IRA stands for Individual Retirement Account. This plan has nothing to do with who you work for. So I have one of these as well. So I have a 403b, which is connected to my job. And then I have an IRA. In fact, I think I have a Roth IRA. And this has nothing to do with who I work for. You could open one now, I believe, at least as long as you're 18. I'm sure you could open a Roth IRA. It's a retirement plan that you open with a financial institution. So, like, I think mine's through something called American Funds. And you can contribute to both an IRA and a 401k or 403b. So that's what I do. I'm contributing to my 403b and also to my IRA. Okay, so the rules about this are they are tax deductible for most people unless you earn too much, which is not me or you. There are withdrawal rules, tax rules. Earnings in the account grow tax deferred. You only pay taxes when you take the money out. So it's the same thing as before. You don't get taxed while it's in there. You get taxed when you take it out. And again, there's an early withdrawal penalty. You can't get the money until you're 59 and a half. And if you take it out early, you get a 10% penalty. So it's really similar. But the thing about this is there is no connection to your job. Whether you were in either of these two, there's no connection. It's totally separate. A Roth IRA is just another type of that IRA. These two are really the same thing. The only difference is this one does not lower your taxable income, but the advantage is withdrawals are tax-free. So that means when you go withdraw your money, you can take it out tax-free, and there is no penalty to taking out the money early. So you don't have to wait till you're 59 and a half. Besides that, these two things are basically the same. Okay, so for this assignment, you're going to have another set of questions. Okay, the set of questions will be in Classroom, and I'll include this list of explanation as well, so you can keep referring back to it. So you've got the 403B. This is for teachers, nonprofits. The traditional IRA and the Roth IRA, which are almost the same with a little bit of differences, and you can read more about that here. And then you're going to answer the questions. All right, that will be it.